Hello everyone, and welcome to another Discussions with Dolf. And today I'm coming to you from the heart of Phoenix, Arizona. I say the heart because when you look at the scene behind me, and you should be able to notice there's kind of a mountain there with a couple of homes, you might think that I'm on the outskirts or in some exotic location, 20 miles out of town, but I'm not. I'm about a mile away from one of the busiest intersections in Phoenix, Camelback Road and 40th Street. No, not 40th, 44th, but anyway, close enough. And so this is on the side of Camelback Mountain, and there are many homes like this. And it really highlights one of the things I want to talk about, and that is averages. We are inundated in a world where we're given averages on everything. The average growth rate, the average this, the average that. So when we seek investment properties, we tend to seek the average. In fact, there are even proponents of finding a piece of real estate that conforms to the average in every sense of the word. It's not at the low end of the market, it's not at the high end, it's right smack bang in the middle, right in the average. And there's nothing wrong with that per se, but of course one of the challenges you've got with being in the average is that's where so much of the market is that it takes a lot for prices to shift. Whereas when you do something a little bit more exotic, something that is out of the ordinary, firstly you'll find that price gyrations tend to be a bit higher, so you might catch some of those rises a bit more, but also it is easier to do things to a property to massively increase its value because you're already in a unique location. I think you'll have to agree that the houses behind me, one on that side and one on the other side, that they're not normal average houses, even for Phoenix. And averages are a funny thing because we all tend to have these funny notions about how averages should work. And I always chuckle when I think of doing events back in Australia. So I'm from New Zealand originally, and Australians and New Zealanders generally get on very well. But there is a lot of rivalry. I'd call it friendly rivalry between the two countries. Of course, it only happens when you're down under, because if an Australian and a Kiwi meet somewhere in Europe, they're the best of buddies and they lament the fact that they don't get the things that they're used to from home. And whereas when they're down there, we're sort of big rivals. So I do an event in Australia, and one of the comments I'd make is I'd say, here in Australia, half the population is of below average intelligence, whereas across the Tasman Sea in New Zealand, half the population is of above average intelligence. And you'd get a few chuckles, and usually a lot of chuckles, but occasionally there'd be a mad Australian amongst the audience saying, how dare you say that? Or that's not even true. And I say, well, you, sir, madam, you're tending to prove the point. And here is the point. In Australia, half the population is of below average intelligence because the other half is of above average intelligence. That's how you get an average. And similarly in New Zealand, half the population is of above average intelligence because the other half is of below average. And we tend to lose sight of the simple statistical reality. We get drawn away with the energy and the fever of what it might mean. And averages are just numbers, and numbers are just statistics. And as I always say, statistics are just a group of numbers looking for an argument. You can use statistics to prove any point. Politicians sort of make a good game out of this, with two different politicians on opposing sides of whatever argument would tend to use the same statistics to prove the opposite point of view. And so my game in real estate is always to beat the average. If you can beat the average, you're doing pretty well. And I've in fact got 18 ways of beating the average in real estate. And we don't have time in one little session to go over them now, but I want to give you a hint as to how it might happen. So I live here in Phoenix, Arizona. Few people realize that Phoenix is in fact the 5th largest city in the United States. That's neither here nor there. But it has one of the highest growth rates and capital values of real estate in the country. In fact, it's only rivaled in alternating years, it seems, by Las Vegas, Nevada, also with an extraordinarily high average growth rate. So just by investing in Phoenix as opposed to many other cities in the United States, you'll probably tend to do better because Phoenix has a higher than average growth rate. And I can pick on other cities. I don't want to be mean to anyone, but I'm also just talking about statistics. Like North Dakota, for instance, has a much lower than average population growth, and not surprisingly, it's got a lower than average growth in capital values. This is just a statistical fact. It's no reflection on the quality of life in Dakota. In fact, I believe in the summertime it's quite nice there. No, I'm being a bit silly, but it does get frightfully cold there in the wintertime, which is probably why not many people live there. Now that's Phoenix on average, but do you think there may be suburbs in Phoenix which grow faster than the Phoenix average and other suburbs which grow slower than the Phoenix average? And the answer is yes, of course. You'll always get these anomalies. You'll always have a situation where some suburbs are more popular and therefore grow faster, and others are sort of dying, or they're where an old industry that's itself died used to be. And so if you know which suburb to find, and it doesn't take you 5 years to figure this out, folks, you might be able to work this out in a very very short space of time and know which suburb. So you can have a suburb that grows at higher than the city average, and Phoenix already is a city that's growing at faster than the national average. So here we're beating the average by a wide margin. And, I've given other ideas over the years on these discussions with Dolf programs as to how you might beat the average. So that's what the game is all about. And when I look at the properties behind me here, these are the sorts of properties that will go up in value when the economy is good, if it's not tanking, if there's not a global financial crisis or a major depression. Well, I guess the global financial crisis was a major depression. But if there's not something like that going on, these homes would tend to go up in value faster. They've got views, they've got more airflow because they catch the breezes. They're above the haze lines sometimes. They catch more sun. It's just all these advantages. You can't have your view blocked, because even if a neighbor builds right beside you, they're generally so much lower that their roof line will be below your window line. So these are just some of the reasons why properties like this tend to go up in value faster. So I encourage you not to conform to averages. Don't become a statistical average yourself. Do something different. It's all about being different. Apple's slogan for a long time, think different. I always thought it was think differently, but anyway, even by being a maverick and not getting your grammar right, you're being different in that regard. It's a matter of standing out from the crowd. Do things that other people don't do. I've talked about this for years, how by adding things to a house that most people don't add, you can differentiate yourself, and that's what will turn a mediocre investment into a great investment. Anyway, folks, that's all we've got time for again this week. I want to wish you well, and as always, hope that you have successful investing. Thank you so much.